Welcome to the Fiscal Chronicles, a graphic guide to government finance. This video will explore how capital is gathered, planned, and deployed to balance the nation. Issue number 1, the Command Center. The U.S. government is responsible for creating laws, defending the country, shaping foreign policy, and maintaining public services and the economy. This requires financial power. The 16th Amendment gave Congress the power to collect income taxes, which is the government's main source of operational revenue. The origin of capital comes from revenue and taxes. Revenue is money made from business operations, with the majority of government revenue coming from taxes. Taxes are mandatory payments collected by state or national governments from individuals or businesses. The Internal Revenue Service, or IRS, is responsible for gathering this capital. The top 4 revenue contributors are income taxes, the largest source, collected from people's earnings; payroll taxes, dedicated to funding mandatory programs like Social Security and Medicare; corporate income taxes, based on corporate profits; and finally, excise taxes, charged on the manufacture and sale of specific items like gas and liquor. The Great Divide is about deploying the capital as expenditures, which are payments for goods or services that provide a benefit over a certain period of time. Mandatory expenditures, or the immovables, are required by law, such as Social Security. Discretionary expenditures, or the flexibles, are approved by Congress yearly for things like transportation and military. The budget gauntlet is the annual spending plan authorized by Congress. The process includes executive formulation, congressional debate, Senate review, and the final signature by the president. The economy isn't static. It can freeze up, resulting in a recession, or overheat, causing inflation. Fiscal policy is how the federal government influences or stabilizes the economy using taxation and spending to manage these extremes. The ultimate showdown is between expansionary and contractionary policy. Expansionary policy targets recession with tax cuts, increasing money available in the economy. Contractionary policy targets inflation with tax increases, reducing government spending to control rapid economic growth. Let's test your knowledge. The main source of revenue for the economy is taxes. And which taxes provide the largest source of revenue? Income taxes. Question 1. Mandatory expenditures are required by law. Question 2. The federal budget must be given to Congress for approval. Question 1. Expansionary fiscal policy increases money in the economy. Question 2. Fiscal policy is how the government influences the economy. The cycle continues. Citizens and businesses pay taxes, generating revenue. The federal budget is created, deploying capital as expenditures. When the economy falters, fiscal policy is used, adjusting taxes and spending to keep the nation balanced.